Welcome to our weekly Forex forecast, and this is for trading for the week of November 23rd to 27th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we will start off by taking a look at our calendar here. All right, so this week here, coming up, we have PMI numbers. PMI numbers are important because they are precursors, they're leading indicators. So if the purchasing managers are buying stuff, that means they're expecting sales, and we can expect higher activity in terms of retail sales. So these numbers are important here. And at this point, there is a bit of a decrease here, and all of that has to do with the virus numbers coming out. Now, if the decrease here is bigger than what the expectation is here, that will be negative for euro. So in terms of the virus here, so right now, things are not looking that great. The numbers have been going up across the world, and we are seeing a lot of different restrictions that are being put into place, and we are likely to see more as we get into these colder months. So this week we have seen some positive news in regards to the vaccines and the antibody medicine. However, right now, these things will start producing, they'll start getting produced in December, but they will not be available for the masses till I believe into spring. So the earliest we're likely to see any sort of mass production or mass availability, I should say, for any of the vaccines will be into April is what we're looking at. So what that means is we are likely to see some problems in the meantime over the next few months. And if things become critical, we are going back into lockdowns. So that is something to pay attention to, because if we are back into lockdowns, that is going to impact the economic growth, and it will have a negative impact on the markets and all of that. So that's something to watch out for as we head into the next couple of months here. So we'll keep an eye on it. But in terms of the PMI numbers here, the numbers, any numbers that are below these numbers will be negative for euro. And then we also have PMI numbers for the pound. So same thing applies if we see lower numbers than what the expectations are, because expectations here are already lower than the previous months. And it's interesting because we are going into Christmas month. So if these numbers come in below expectations, that will be negative again here. Now for the pound here, we do have monetary policy report coming out here. At this point, what we are looking at would be concerns regarding Brexit, and also concerns regarding the virus here. The problem that we are seeing right now is we have heard back and forth in regards to Brexit negotiations. At first, we were supposed to see an agreement in place first week of November, and then it was supposed to be third week of November. That did not happen, and now the deadline is December 31st. So as we get closer to that date, we're likely to see more volatility in pounds, especially in regards to these the policy back and forth, so in negotiations back and forth. So that's another thing to bear in mind. If you are trading pound into these coming weeks, expect volatility. Tuesday, we have consumer confidence numbers here. Again, it's relatively high, but with the number of cases that we have seen out of the US, this number, if it comes in below expectations, that will be negative for the US dollar. We also have Governor Orr speaking here for New Zealand. Now, the central bank or Reserve Bank of New Zealand has promised that they're going to support the economy as we go through the next few months here. So any sort of concern or further concern from Reserve Bank of New Zealand is going to negatively impact the New Zealand dollar. So comments, all that we are concerned about here would be how does the central bank see the upcoming months and the impact of those months on the economy and what kind of long-term impacts are they looking at. So anything that would be concerning around that would be negative for New Zealand dollar here. And then we do have stability, financial stability review out of the Eurozone here. And also unemployment claims for the US. So unemployment claims have started going back up again. We are seeing more layoffs in the US. So these numbers, if they come in higher than expectations here, that will have a negative impact on the US dollar, especially going into the Christmas season here. We also have consumer sentiment numbers. Again, these numbers are relatively high right now, but if they start to decline, that would be a cause for concern as well. And of course, we have Fed here. And right now, with the Fed is in an interesting place right now because with the transition in the government from um, one government to another, it's not going too well right now. The handoff is not going too well. Now, President Trump's team is challenging results in certain states. And as we see more of that, so basically the problem is the virus uh, is really impacting the US right now. The transition of power is not going too well, and there is no stimulus package that has been in place, and there's no hope for a stimulus package at least till February now. All of those are negative things. So if the Fed says that they're going to step up their role and they're going to provide more monetary policy support, that will be negative for the US dollar. It will be positive for the stock market, but it will be negative for the US dollar. So that's what we need to look at. How is the Fed viewing this whole situation? Because it is definitely concerning right now. So that's that. And then, of course, as we go into the weekend here, it will be a long weekend for the US. So expect the liquidity to be lower as we go into the Thanksgiving weekend. So Thursday is a holiday, but that basically usually Thursday, Friday, the liquidity will be low in the market, which means the market can either be dead or some moves can be quite exaggerated. So just watch out for that. All right, so let's take a look at our charts now. We'll start off with euro dollar. So euro has been trading in this range here for the last several weeks since August here, hasn't really made the way out of this. Now we have a neutral candle close here. So the bias is neutral. So basically, if price doesn't go through here, we are just looking for price to come back into the range here. Right now, bias is neutral, and I will look for a move towards 1.1740. Now, by chance, if it does go through, then this one can go all the way to the highs, which will become our next target, which is 120. But right now, looks like price is rejecting the high of the range, which means we're likely to see a move back towards the middle of the range. So target here is 1.1740. It's a neutral bias for euro dollar. Pound dollar here, pound has been back and forth here. So we keep hearing these positive comments in regards to the Brexit agreement being reached. And so far, we haven't seen one. Now, if we hear more of those comments, we are likely to see price go higher. And in that case, I will look for price to go test the highs towards 1.3485. So the candle close here for the week is bullish, but the challenge here is it's right into this resistance level here. And it hasn't really closed on the other side of it. So if it doesn't, of course, we'll look for a move back. But because it is a good solid candle close, and if the comments are positive, then we're likely to see a move higher. So I would say the target is 1.3485 with caution though, because we are into resistance, and if it doesn't get through, we're likely to see it go back. So watch out for that. But for now, bias is bullish for pound dollar. Aussie dollar here, this one has been sideways. This has also been trading in a range, as we can see, very similar to the to the euro here for the last several weeks here. As we can see, since July, August here, it's been stuck in a range and it hasn't gone through the high of the range. It wasn't able to break it last week and or the week before here. So now I'm looking for a potential retest, and if it holds, looking for a move back towards the middle and then potentially bottom of the range here. At this point, bias is neutral, and if it holds below the resistance, the top of the range, I will look for a move back towards 0.7200 and then potentially lower back towards the bottom of the range. But should it go through, then essentially we have these levels higher. So the important part will be to watch the top of the range and see how price reacts at those at that level. So last time it was here, for 2 weeks it didn't close above, and then we saw a drop. Now we are back into the same sort of scenario where for 2 weeks here it hasn't managed to go through it, which means we could see a drop. So this one also is tied very closely to the stock market. Now with the stock market, we have been seeing a lot of, or hearing a lot of positive news in regards to the vaccine. And I think it was over the weekend that they said they are going to allow, the FDA has given approval for the antibody treatment that President Trump received while he was in the hospital. So if that's the case, we are likely to see a positive impact on the stock market on Monday here, and that could push it to retest Aussie, or top of the range for Aussie here. And if it goes through under that, then we're looking for higher move. But if it gets stuck here, I'm looking for a move back down. So we'll see how the market opens here after this news. But overall, watch out for all this positive news that we are hearing for vaccines. So as the stock market goes up, Australian dollar is likely to go up with it as well. So for now, bias is neutral, looking for a move back towards the middle of the range here, and target is 0.7200, and then we're looking at 0.7160. New Zealand dollar, this is similar here as well. New Zealand dollar has been doing quite well. And right now, as we can see, prices into these resistance levels that we haven't seen since 2018. So it's still going higher. All this move was reversed, and now it's back into these some higher levels here. So we have a bullish candle close. First target is 0.6970, and then we're looking for a move higher into 0.7060 back into this resistance level. So bullish bias here for New Zealand dollar. Dollar CAD here, this one has been sideways. As we can see, this has been trading in a bit of a range here as well. Prices into solid support, and now we see that it hasn't been able to break through that support level. So right now, this is also trading in a range, and if it holds above the support level here, we're looking for a move back into the range again, to potentially towards the high. So right now, neutral bias. I'm looking for a move back into the middle of the range here. If it goes through the bottom though, so all the US dollars, so all the dollar crosses are likely to break at the same time. So if we see New Zealand dollar going up, then we're likely to see dollar CAD dropping and Aussie dollar going up as well. So we'll just have to keep an eye on all of those. But for this one here right now, first target here is 1.3225, and then if it goes through, we're looking for move back up the range here. So neutral bias for dollar CAD as well. Euro pound here, this one has been back and forth again because of the Brexit negotiations. The candle close here for the weekly is bearish, so I'm looking for a move back down towards 0.8865, back into the support level here. So bias is bearish for Euro pound. Euro Swiss franc here, this has been stuck in this range. Now, it's doing this flag formation here. We'll have to see which direction it breaks in, because what could happen here is we have a flag. Now, it can break out and reverse this move, or it can do continuation flag formation, which would be goes up and then breaks out, right? Now, because it's still stuck here, we don't know which way it's going to break. It still hasn't broken. So it's a bit of a wait and see situation here. So once we see the flag formation break, so it seems to be putting a bit of a pressure to the upside here, but it hasn't broken yet. So if it does break, then I would be looking for a move higher, but not prior to that, because it could just very easily go through here and do one of these, right? So neutral buys for the time being, and we'll watch and see where the break comes. So Euro Swiss franc is neutral for the time being. Pound Swiss franc, on the other hand, has been making its way higher. This has also been trading in this range. It's been trading in this broad range for quite some time now. As we can see, this is the range it's been stuck in. At this point, it looks slightly bullish, and I would look for a retest of the high at 1.2220. And if it fails, we're looking for a move back into the range again. So market just is in this waiting period right now, even though we are seeing moves back and forth. Really, there's no real trend at the moment. We are not going in either direction. Everything seems to be just cycling back and forth. And that can be difficult because it can basically, the fluctuations can cause problems. But keep that in mind. We are stuck in a range. That means we have to watch out for the highs and lows of the range. For this one, bullish bias 1.2220 is the target here. And then once it gets to this level, then we'll see if it's able to go through or not. If it doesn't, we're looking for a move back down, so that we'll monitor it on daily basis. All right, so this one here as well, again, stuck in a range. As we can see, price has been going back and forth in this range here as well. And this week we saw price basically didn't really do a whole lot. It pulled back, dropped. Now I'm looking for a move back towards the support level once again. Bias here is neutral as well. First target would be 0.9050, and then looking for the bottom of the range at 8980. So for now, bias is neutral for dollar Swiss franc. All right, so let's take a look at the yen crosses here. These ones haven't been faring that well either. Everything is essentially in a big fat range here. So this is where price has been. It hasn't really done much this week. We have a completely neutral candle close, which means it can go in either direction. So what we need to watch out for here would be the interaction at the resistance level. So if it goes and retests it and holds below, then we're looking for a move back down. So right now, bias is neutral. I'm looking for a retest, and on the daily, we'll monitor and see how it holds. If it holds below, I will look for a drop. So neutral bias for pound yen. Euro yen here, this one hasn't really done a whole lot. As we can see, this one as well is trading in a range, and it really hasn't gone anywhere. So this one here, this is the wider range it's been trading in. As we can see, it's still stuck in this range. Bias is bearish. We do have a bearish candle close. The only thing to worry about here will be the Brexit negotiations. If they're able to reach an agreement, both euro and pound are likely to go up as a result of that, which could turn things around. So for now, though, bias is bearish. 121.70 is the target back into the base of this range. And then if it doesn't go through, we are back again, essentially. So bearish bias here for euro yen. Dollar yen here, this one as well is looking bearish here. Now, the yen crosses, just keep in mind, yen crosses will be tied into the stock market. If the stock market starts to go push higher because of positive vaccine news or antibody news or anything like that, that will be bullish for the stock market and bullish for the yen crosses as well. So the yen crosses will go in the same direction that the stock market goes in. Just watch out for, or keep an eye on the stock market. Because these are, again, these will move based on the stock market, not the other way around. So if the stock market starts to take off, this will likely take off as well. But at this point, I'm not really expecting the stock market to just continue going higher because of the next few months with everything that's going on. Even though we are seeing positive vaccine news, the reality is those vaccines, first of all, the number of participants in the studies are just the number is so small that we don't know. So it's less than 100 people in both of those companies, the studies that have been done on less than 100 people. So that's a concern. We don't know if the virus, by the time the vaccine is actually available to everybody, we don't know if the virus would have mutated by then. And so it is already mutating, but we don't know how effective these vaccines will be, which are based on the first version of the virus, how effective they will be. And of course, we have to get through the next few months. And next few months, the economic picture may not be that rosy, which means we'll have a negative impact on the markets because of that. So in spite of the positive news from the vaccines, I'm not looking for the market to break the highs unless something really out of the ordinary happens. So watch out for that. So Will, sorry, what's the question? Elaborate on what? So yes, the yen will be safe haven. And what happens is when the stock market drops, the safe haven currencies get stronger. So yen is a safe haven currency, which means the yen will get stronger, which means yen crosses will drop. So when the stock market goes up, yen weakens, and that's why the yen crosses will go up. But the easy thing to remember is when the stock market goes up, yen crosses go up as well. So pound yen, euro yen, all of them will go up. When the stock market weakens, yen crosses will drop. So I'm looking for this one to drop further. The thing with US dollar is also a safe haven. So dollar yen is usually, and dollar Swiss franc, they're not always the best ones to look at. But right now, bias is bearish here, and target is 103.20. Aussie yen here, this one hasn't really done a whole lot. This also has been trading in a range again. So a lot of stuff is range bound at the moment. So here we are. This is the range it's been trading in. This week's candle close is neutral. So I'm looking for a move back into the range, and it just hasn't been able to go through. So I'm looking for a move like this back into 73. So bias is neutral to bearish here for Aussie yen. New Zealand yen, this one is also holding this pattern like we saw in Euro Swiss franc. See how it was holding up there? And when the price holds like this, it can go higher. So it ends up being our flag continuation pattern. And this is exactly, this is what our New Zealand yen is doing. It hasn't been able to break through the support here. So if it doesn't break through the support, breaks out of the high, then we are looking for that continuation pattern to the upside. At this point, that hasn't shown up yet. So what could happen is price holds here, goes down, breaks, and then reverses. We don't know whether this will end up being a reversal pattern or a continuation pattern at this time. So it's a wait and see situation at the moment. So bias is neutral. We'll have to see where this wants to break. If it wants to break through the support, we'll be looking for reversals, and this inefficient move will get filled. But if it doesn't, if it breaks out to the high, then we are looking for this continuation move higher over here. So that becomes then the continuation here, and we'll look for that. For now, neutral bias will wait. CAD Yen not doing that well, has also been trading in a range. So we have, as we can see, price hasn't been it. So this is the big range that it has been trading in all the way to the high. Hasn't been able to make out of this range since May of this year. And this week we have a bearish pin bar. So I'm looking for a continuation to the downside here into 78.00. So with the Canadian dollar, the problem is also oil. And if the economy or different economies around the world go into the lockdown, that will be a negative thing for oil, because oil demand will go down. And as a result of that, oil prices will drop as well. When oil prices drop, Canadian dollar drops as well. So keep that in mind. So the move in Canadian yen can be exaggerated because of, one, yen being strong and the Canadian dollar being weak because of oil dropping. So this is a good pair to keep an eye on should the market drop. So bearish bias for CAD yen. All right, so let's go and take a look at our silver here. Silver also range bound, as we can see. It's been stuck in this range. Everything is in a wait and see mode. So this one here, we have a neutral, again, neutral bias here, potentially looking for a drop towards the support level, but it's right in the middle of the range at this point. So bias is neutral for silver here. Same thing for gold. We see gold hasn't really done a whole lot. It's been sideways. This is the range it's been trading in for months now. And it keeps on testing the support level. It just hasn't been able to break through the support level. So if it doesn't break through the support level, we are back into this range once again. So bias here is neutral as well. If it breaks to the downside, then I would be looking for this move to get filled. But until then, it is neutral. We will have to monitor it again on the daily. If it breaks through the support, then there's plenty of room for the downside, but it's still holding on. So bias is neutral here, and target is 1850, and then we'll see potentially a move back into the range. Oil here. Oil has been trading in a range, of course, as well. Just like anything else, it hasn't really done a whole lot. This is the top of the range, and now it's been back and forth here. With this one, there's slight bullishness. I am not too bullish on this. So we could see a move like this. I'm looking for a potential push into the high of the range towards 43.75. And then if it fails to go through, we're looking for a move back into the range. So neutral bias for oil as well. Copper here, copper is taking off to the upside, and this is looking quite bullish. Next target is 3.30, basically looking for a retest of the highs here. So bullish bias for copper. Bitcoin has been very bullish here. It's into the resistance levels now. With Bitcoin, what's really driving Bitcoin has been just Bitcoin becoming more mainstream as opposed to, so there's less speculation. There's still a fair bit of speculation, but because it's becoming more mainstream with PayPal jumping into it, Facebook's jumping into crypto, and now hedge funds holding crypto's becoming, it's starting to be taken more seriously now. And hence we have seen these big moves to the upside. So still looking bullish. I would be concerned about the resistance levels here, but nonetheless, it is bullish. So bullish bias here. I don't have the weekend numbers, but all in all, still looking quite bullish. And the moves here, there is momentum in it. So we could see this one go all the way into the high. So bullish bias here. When does President Trump leave office? January 20th, I believe. So there's still time. So into the new year. And this is why we're not likely to see a stimulus package till the new year. All right, so the stock market here, it's been sideways last week. Now with the with the emergency approval from FDA for the antibody treatment, we are likely to see a move higher. So we'll take a look at how it opens. But based on everything that's going on here, this is looking bearish. We have a bearish pin bar. So what may happen here is we may see that move higher from the antibody treatment and then a drop from there. So bearish bias 3,500 is the first target, and then 3,420 is the second target. So bearish bias for S&P 500. Same thing here for Nasdaq. It hasn't done much. This is also trading in a range. So since July of this year, it's been back and forth here. So we see price has rejected the high. It's kind of sideways here right now. So I'm looking for a drop. Again, there will be that push higher from the FDA approval, but overall bearish bias 11,500 is the next target. Dow Jones here, this one as well, we have a nice bearish pin bar, and I'm looking for the same thing here, a pullback and then a drop here, and target is 28,570. And then we have DAX here. DAX is sideways. This is not really going anywhere at the moment. It's right into this resistance level. It's just hanging on. So neutral bias here. We'll see what happens with the Brexit negotiations. That will have an impact. But for the time being, this is looking neutral. And if it holds here, I'm looking for a move back towards 12,685. So neutral to bearish bias for DAX as well. And then FTSE, same thing here. It's holding on, but not really going anywhere fast at this point. As we can see, it's getting stuck into the resistance here. And if it doesn't go through, I'm looking for a move back, and this is this inefficient move here that could get filled. So neutral to bearish bias, 62.20 is the target here. So neutral to bearish bias for FTSE as well. And last one here, we have Nikkei. Nikkei's been holding the highs here, but now it wasn't able to go through. So we have a doji here. We have a indecision candle. It opened and closed at the same place. Now, if it doesn't go through, basically what I'm looking for here is a retest of this level and then a drop. So neutral bias for FTSE, we'll have to see, sorry, my apologies, Nikkei. If it doesn't go through here, this is what I'm looking for. So bias is neutral here. Pound yen. Pound yen is going to be dependent on Brexit negotiations, but right now this is neutral. So completely neutral candle close here. What I would be looking for here would be a retest, and then if it holds, a drop. And targets here would be this 137, and then if it goes through, then lower. Pound Aussie. Let's take a look at Pound Aussie. Is a little tricky at the moment. Again, it's range bound. It's holding here. Hasn't been able to break the support level in 3 days, which means we could get a move higher here and back into the range. So that's what I would expect. For now, though, 2 neutral candles back to back. So if it fails to break the support, we're looking for a move back into the range. All right, you're welcome. All right, you guys have a wonderful trading week, and I'll be back again with our daily analysis tomorrow. So enjoy your week. Bye for now.